Welcome back to Trade Pro FX. Today is another amazing video, and if you are a beginner or a pro trader, the first thing I'll be showing you today is how to identify the uptrend or a downtrend. So if you are using a mobile device, for most of you, so the first thing, you just go to your derivaviewcharts.com, and then when you open the first market that you will always encounter is volatility 25 index. So this is for the daily candlesticks. So each candlestick represents one day or the daily candlestick. So it means that each candlestick here is of one daily one of 24 hours candlestick. So the first indicator you will be using is called the EM or the Williams fractal. Then we will continue and put the EMA. So for the Williams fractal is very effective. You can see how it prints itself. We have the up fractals using the green, and we have the red fractals as it is shown. So I guess most of you have been using this Williams fractal. So if you have come across it, that's how you will put it. You press the FX and then put and then search your indicator. That's the Williams fractal. So we will not be changing any, it will just remain as it is at default. And for these up fractals and the down fractals, number one, an up fractal is formed when a high point is followed by two lower highs on either side. So it appears on the chart as a signal for a down trend. So it will remain as it is for period 2. We will not change anything, so it will just be at this period 2. That's the normal Williams fractal. It's usually at period 2, and that means when you ever see it with this period 2, it means that this shows that the signals will reflect faster when there is reversals. So you may encounter false signals, but that's why we will be using our EMA to counter check those two things. So when using period 2, it's just using a shorter period, and it's more responsive to minor price fluctuations. So with that, let's proceed, and then they are currently we are at 24 hours. So you can change your market to any point or any candlestick time frame zone. That's any. So you can see we have down fractals and the and up fractals, and I've told you the down fractals is represented by red, and then red arrow. Then for the up, we have one which is represented by a green arrow, as you can see currently on this chart. So the first thing you can see these zones are marking. You will note that anytime a down fractal is formed when a low when there is a low point, the down fractal, which is I've told you is the red candlestick. So whenever it is printed below, it shows it is followed by two higher rows on either side. You can see it is always followed by two higher rows on either side, this suggesting an uptrend reversal, and it is marked by a symbol or an arrow below the point, as you can see it. So the next thing we will put it is EMA. The EMA is usually helpful because it helps to smooth the price data and places more weight on the recent prices, so making it react to the price changes than the simple moving average we have known. So you can see as it is placed, you can see it's showing us a very good movement, and just looking at it is this of period 9, and the best to use is period 10, so it can give you correct and perfect entries. Currently you can see it is shows a very good uptrend on this area. So with that, you just wait for, after you have set everything, you wait for a printout of these simple Williams fractal, and then look at the candlestick, and then if the candlestick crosses above, so you see the candlestick cross above the EMA, you can pick a trade. So let's move to the 1 hour, which is a bit gives a bit clear. This is for swing traders, guys. So if you are a swing trader, you can use this to trade entries, and you can see when it prints an up fractal and then the EMA is above the candlesticks, the movement of the candlesticks proceeds in a very systematic way. So it's very easy that when you see an engulfing pattern or a two candlestick pattern where there is a larger candlestick and the candlestick is engulfing, completely covers the previous candlestick, and then we look at the EMA, it is forming like this currently, it is forming below the candlestick and the candlesticks are above it, you can see, and there is a breakout of the engulfing pattern, and then it has engulfed completely. This is usually for the swing traders. So if you see such kind of movement, you can pick if there is a bullish engulfing pattern appearing when a bullish, that's a green candlestick, fully engulfs the body of the preceding bearish red candlestick, signifies that that's an uptrend reversal. Then for the scalpers, use 5 or 15 minutes for better entries. So you will use these 15 minutes for better entries. Those are for scalpers. So you just look at the same when maybe a bearish engulfing happens pattern that appears, that's the red candlestick appears and fully engulfs the body of the green candlestick, and then the EMA has already crossed. This is an uptrend of where we have a green candlestick that has engulfed, and then the candlesticks forming are above the EMA, we take an uptrend. So it's just very simple, observing how the two of them are behaving, the two indicators, how they are behaving. There is a printout, it gives you actual entry. You can see here there is a breakout, like you can see there a bullish candlestick has engulfed a bearish candlestick, that's preceding a bearish candlestick, therefore giving a signaling an uptrend reversal which took place after the print out of the Williams fractal. So it's that easier. Let me repeat again how you add these indicators. Press the FX, then search for your indicator, the first one, which is moving average exponential, not this moving average. You see that one, not that one. So you put the right moving average, that's exponential moving average. So that's moving average. You just scroll down and put moving average exponential, which is there. Then after you do so, for the scalpers, we have talked about the 5 to 15 minutes scalping, and then we can see the next one is Williams fractal, so you put that, and then only the observation is looking for a candlestick that has already break out of the EMA. Like you can see there, we can spot there is a breakout of the bearish candlestick, and then there is a fractal, a printout of the up fractal, so the down fractal. So we just pick a trade to the downwards. So whenever you see such kind of a bearish red candlestick fully engulfing a green candlestick, we can take a trade. So the best lengths for this is 10, and then for the smooth line you can put everything to 10. So this one is at 2. I've told you there is no changing it. The only thing is to change is the EMA, because it is usually at 9, which is not a big difference. So you just put 10, and then for the smooth line you change it to exponential moving average, and then from there you are done. So it's simple like that. After you set everything, look for a bullish engulfing pattern where the candlestick closes above the EMA. This indicates a potential shift to an uptrend, and or a continuous existing uptrend. Then you can enter a buy trade at the close of the engulfing candlestick. Then as it confirms the strength of an uptrend like this one, you can see this one now is taking a downtrend because it's nearly crossing, and you can see it has crossed and engulfed that green candlestick, so a potential downtrend from there. But for currently, by just backtesting the previous candlesticks, we can spot the various points that maybe if you would have entered after spotting these kind of movements, like this one for a bearish candlestick, we can see this was a good downtrend because the EMA was on top of the candlesticks. So let's pick a short trade. So you can see at the pattern where the candlestick crosses below the EMA, this is the potential, this is where it indicates a potential shift to the downtrend or a continuation of an existing downtrend. So you can see the first thing, you put the stop loss at that point, and then always aim at a risk reward ratio 1:2. Always put your stop loss just slightly below the engulfing candlestick as I've done. And then for the take profit, take a ratio reward 1:2. Exactly, ratio reward 1:2 is the best. If you take such kind of a bearish entry, you see you will already have gotten some profits after the ratio 1:2, reward ratio 1:2 is over. It's very simple, as you can see. So in case maybe you want to try this, go back test and you can call it a day. So it's very simple to analyze using your mobile device. So you want to avoid those false signals. What you have to do is just to look for the engulfing patterns only near the EMA, and avoid entering trades if the pattern is so far above the EMAs, as it may be too late in a trend. So, and then for look at the volume confirmation, so you can know what kind of market, how is the volume during the engulfing patterns. So you can that's why we have you can add some indicators like Bollinger Bands. So just try it and go back test and see how it works on your site. So by combining those two, EMA with candlestick engulfing patterns, you align all your entries with both the trend direction and price actions, which can improve the accuracy of your trades. You can see like here, if you took an uptrend, these strategies will be very useful for swing trading and for short-term trades as well, where the trend confirmation is always essential. Like there, you could have taken a ratio 1:2 exactly, and after you do so, you will already have exited with something good. So that's it for today. Let's meet in the next video, guys. Subscribe, share and comment. It's very easy to note trends by using these indicators.